Eric Sprott, Rick Rule, and Keith Newmeyer are three successful resource investors coming together for one simple reason: to buy cheap assets from distressed companies and seize this once-in-a-decade opportunity to buy gold, silver, and other mineral projects for pennies on the dollar. First Mining Finance Corp., trading on the TSX Venture under FF, a recently launched venture with the sole purpose to acquire advanced stage natural resource projects, and starting on day one with 18 projects, management has already identified over 60 additional projects to acquire. Learn more about First Mining Finance at futuremoneytrends/investright.
Well, hello everyone, and welcome into crushthestreet.com. I am Kenneth Amaduri, and today I have a special guest. I'm joined with Andy Hoffman of Miles Franklin, and if you're looking for great deals on precious metals, definitely check out Miles Franklin. You'll get great customer service, and I also think after you listen to this interview, and maybe you're already familiar with Miles Franklin, that you'll get a lot of knowledge from the website and the people there. And one of these people that I'm with today is Andy Hoffman. He's an expert when it comes to the bigger picture, the economic bubble, dollar crisis, precious metals manipulation. And he's one of the most knowledgeable people I can think of when it comes to all these things. Thanks, Andy, for joining me today.
Well, thanks for the kind words and the kind words for Miles Franklin. It's a pleasure to be on your show.
Andy, you recently wrote about the gold cartel and how they're running on fumes, and you wrote an article recently about the upcoming inevitable COMEX-ident, kind of a little play on words there. And you discussed the COMEX as merely a paper exchange with essentially no physical inventory. And for the first time ever, June gold delivery demand exceeded the COMEX record low registered inventory. Can we talk about this a little bit and maybe just expand on a little bit of what you wrote?
Sure. Well, look, I've been writing about the gold cartel I've been in this sector 13 years now. I've been writing publicly for probably 10 of those. And I got started writing at the GATA website, so it's kind of been my pet project over the years. And, when I wrote the article about the COMEX-ident, again, I'm trying to distance myself from people believing I'm saying that the COMEX must be the focal point of the end of the gold cartel, where, and look, the point is every attempt to suppress gold throughout history has failed, whether it was the government's attempt to price it at $35 or the London Gold Pool's attempt to hold the price at $35. Or this surreptitious way that they're doing it now through covert use of futures and derivatives and all kinds of things to hold the price down in paper terms. And of course, what it's done, especially since 2008, is it's caused a widening gap between demand and supply. The point is supply is being suppressed by the fact that mining companies are being destroyed by the years and years of low prices. And demand around the world is at a record high. It's unquestionably at a record high in the East. And if you look at cumulatively, the evidence shows that for both in gold and silver, we're sitting at or near all-time highs as we speak. And of course, the prices are down significantly in paper, which is only contributing to this tightness. In that particular article, I was saying, look, we've been watching this for years where you have massive amounts of open interest compared to the piddling inventory. But now we're talking about record amounts of open interest relative to record low inventories. I mean, the inventory of gold at the COMEX that's available for sale is like about $500 million worth. That's it. I mean, there are thousands of entities in the world that could take that out in any second. And in this particular last month, at the end of the contract, of the June contract, there was actually more outstanding of claims than gold. And of course, they find a way to cash settle them even though it's illegal. And, and they throw a little extra gold in there and, it passes because people are just used to this happening because it's essentially a paper exchange. But the fact is, at any time, this exchange can be taken out. And as we saw in 2008, when the entire world ran out of metal, and to a lesser extent in 2011, it's undoubtedly going to happen again, a shortage when we have the next crisis, if not before that. If someone's ambitious with trying to, take out the very limited amount of supply. So that article was just simply to show people that on all counts, be it the supply side, the demand side, and the inventory side, we're approaching a level where something has got to give at some point soon.
It's a kind of amazing because one of the points was the fact that the COMEX or whoever it is that, you know, is issuing the facts on the inventory is that we know they manipulate it, and the fact that the number that they officially put out is so low, it indicates that there's literally no silver backing the COMEX, and I thought that was really interesting. And I'm wondering how long this can go on for.
Well, look, you know, the data there has been immaterial for years, and I've written, even now, I wrote 3.5 years ago, I wrote an article that said the COTs are no longer matter, meaning people used to be able to look at what the, quote, commercials were doing, which just means the JP Morgans, and not commercial anything, you know, and you could see if they were shorting, that means there was a smash coming. If they're buying, they were going to cover their shorts. That's not the case. It hasn't been like that for years. And more importantly, 2 years ago, the CME, with the Chicago Mercantile Exchange, which owns the COMEX, started putting away a disclosure every single day in the data that came out that said, this is for informational purposes only. It's not necessarily true. So why anyone spends a lot of time believing it and spending research and saying, yes, this is going to happen because this data is beyond me, especially when you know who the people doing it are, these JP Morgans. These are the criminals of the world in this sector. But that said, as I wrote, I mean, their goal is clearly to suppress prices. And if they wanted to truly suppress prices, the best way to do that is to claim to have a lot of inventory. So clearly, even for them, it's difficult for them to do that, which is why we're showing an all-time low now of gold inventory, worth only about $500 million. And for silver, it's not an all-time low, but it's only worth, I think, a little over $1 billion. This is nothing.
And then the way they're manipulating it, and you've talked about it, or you wrote about it, is fraudulent swaps, cash settlements, and it's this bailout of the COMEX. And it's kind of interesting to see how they do this. And what you're kind of alluding to is that people are catching on to it, and it's not this stealth operation that they're running anymore. It's something that is being exposed, and hopefully with guys like yourself and Gata, this will be something that will be exposed and can...
Well, look, it's been exposed. I mean, you know, the average person doesn't even know gold trades, and the average investor, you know, with any kind of incentive will ignore it. I mean, they see markets that move the way they want them to. They probably deny that the stock market is held up. They probably deny the bond market is held up, despite the fact that's what QE is for. That's what ZERP is for. But trust me, the big money in the world, the Chinese government, the Arabs, the Russians, the big investors, they know what's going on. Frankly, you'd have to be an idiot to not watch financial markets and not realize that they trade with the exact same patterns every single day, whether it's stocks or bonds or oil for that matter, or gold and silver. And and at GATA we've been documenting. I mean, I say we. I never was with GATA, but I wrote for them for years, documenting all the admissions and all the proofs of it over the years. There's nothing conspiratorial about it. I mean, look at all the criminal prosecutions that have happened in this sector in the last year alone. They kicked Deutsche Bank off of the London Fix for manipulating it. They forced UBS to pay fines for manipulating the London Fix. They're now charging traders for spoofing in the paper, gold, and silver markets, which means manipulating prices. And then, of course, you have all the admissions. And then when central banks like the Germans want their gold back, they can't get it, et cetera, et cetera. So it's not like it's that difficult. Alan Greenspan himself said in 1998, central banks stand ready to lease gold in increasing quantities should the price rise. And when we had the Washington Agreement, surprisingly, was made in 1999, which was an agreement between central banks to limit gold sales to quotas. Now they're all buyers, but then they were sellers. The Bank of England governor said we were looking into the abyss. If we didn't manipulate the price lower, all hell would have broken loose, and everyone would have gone bankrupt. And the Fed and the Bank of England helped us do this. I mean, I'm not sure how much more proof you need. I mean, back in December 2011, in what I call Operation PM Annihilation 2, just as the ECB made a surprise rate cut and gold was breaking out, all of a sudden a headline popped up that says Bank of International Settlements, Fed, and Bank of England selling gold at market high to hold prices down. And the price, of course, was smashed. And then they just retracted the headline and never mentioned a thing about it. I mean, that's called market manipulation. And, if you look at the Fed or the Bank of England's, gold reserves, they didn't go down then. So basically, they just said that they did. They lied. And then they retracted the statement. But no one calls that gold manipulation.
Yeah, you can't argue with the facts, and when you present all the facts the way you do, it's really not a conspiracy theory in the way that a lot of people try to classify people who actually acknowledge all of these things that are going on. But I want to move over onto interest rates, and obviously something that relates closely with gold and the government debt. And we know that interest rates have been historically low. We've seen a little spike since
multi-millennia low, the lowest in 2,000 years. Yes, that's low. Yes. Okay.
Well, okay, so we've seen them spike a little, and since the end of 2014, and we know the government can't afford to see interest rates go higher. I kind of want to talk about where this train wreck is headed. You've talked about the 10-year bond and the government doing everything in their power to keep this from going over 3%. Where is the breaking point, and what are we seeing with interest rates, and where do you see this going?
Right. Well, first of all, it's not just here, obviously. The spike in interest rates we've seen, which is going on today, is around the world. Now, for a couple of weeks, you were seeing every single market have the rates go up, like the United States, Germany, Japan, everything. You're seeing evidence now. You're seeing that the Chinese are visibly selling treasuries, if you believe what they tell you. And I don't see why you wouldn't believe that. So clearly, the QEers of the world, the central banks, have their work cut out for them. Remember, the European QE, 1.2 trillion euros open-ended, just started in March. And the rates in Europe are now higher than when they started, which shows you, that the markets are bigger than the central banks. And, even more terrifying, the PIGs and the other emerging market bonds are getting crushed. So now, look, remember, you have the Fed is meeting tomorrow, and they had to get rates down before the meeting. So they probably have tripled and quadrupled their covert QE to get rates down before that, because you cannot have Janet Yellen speaking with the 10-year breaking above 2.5%. But if you look at today, at around the world, the emerging market yields are exploding. I mean, Greece, not just Greece, but all of the PIGs and others, that are in danger if there's a default of being the next domino, they're surging. So I wrote an article or audio blog maybe 6 weeks ago called "Tectonic Market Shifts Portend Disaster." What is the breaking point? Any interest rate increase is a breaking point. When you're talking about the most indebted economy of all time, I was talking about the global economy, and you're talking about the worst economic conditions of our lifetimes, which are only getting worse. I mean, they're goosing the stock market today, even though it's the same horrible news as yesterday, because it's, they always do the day before the FOMC meeting. But look at the commodity index getting crushed. I'm looking right in front of me at base metals going through the floor right now. So again, the real story is collapsing economy, which typically makes rates go down and kind of makes it easier for QE to work. But when you see rates going up, it shows you that either someone very big is moving the markets like China, or those, bond vigilantes, as they call them, who fear inflation, are starting to come out and realize that hyperinflation is the end game. So look, the whole system's going down whether rates go up or down. That's immaterial. Eventually rates have to go up. But if they lose control, the central banks lose control now and rates actually start rising amidst these horrible economic conditions, it'll end right now. And remember, these extreme movements in interest rates, not only do you have all these interest rate derivatives on the sidelines, many of them which were used to hold rates down and will implode if rates go up, but all of the currencies, most of them are at historic lows against the dollar right now, not because the dollar is strong, but because of all the inflation that was exported to them by all this QE, by the reserve currency, and also because of fear. Everyone is moving, as I said 2 years ago they would, to the, quote, safety of the dollar, simply because it's more liquid than the other currencies. And what you have also on top of that is this currency war around the world where everyone politically is desperate to weaken their currency to gain back the market share in the manufacturing business that they lost. Of course, in reality, that's not how it works. I mean, look at Japan. Their manufacturing market share is getting weaker as the yen goes down. But politically, that's the thing to say. So all these cross currents are working against the interests of the central bankers right now. And, sadly, or for us, I'd say, or not sadly, those trends are only going to get worse. It's a Ponzi scheme. It must grow larger.